decline firmly in favor of the advances. But of course, as Mangalam was mentioning, IT is one sector that is also bearing the brunt, and that is of course because of a sentiment impact considering the sell-off on the Nasdaq, and that is after Donald Trump's announcements of a 27% reciprocal tariffs. Now Jefferies is saying that higher tariffs may impact demand from manufacturing, logistics and retail verticals. Reema is joining in with more on this. Reema.
Thanks so much for that. So broadly, there is no direct impact on IT with respect to tariffs, but the fear is that global growth is going to suffer, and that will hurt the Indian IT companies, especially at a time when valuations of Indian IT company are much higher than their pre-COVID level, and that table will come up for you on your screen. So for instance, in the case of TCS, the current valuations for FY26 stand at 24 times, which is higher than the pre-COVID. We're talking about FY19 valuations. When you looked at it 1 year forward, was at 22 times. And it's a similar, premium for the rest of the large cap IT pack versus their pre-COVID levels. This high valuations comes at a time when growth is struggling. So just putting out JP Morgan's estimates on what they expect IT companies to report in terms of growth in FY26. And we're talking about very low to mid-single digit kind of a revenue growth. So therefore, the question is the high valuation premium justified? The mid-caps are seeing a bigger cut today. Pull up the individual stock price of a Persistent, a Coforge, KPIT, Emphasis. These are stocks which have taken the biggest knock. One reason is they've been ranked outperformers over the last 3 to 4 years on account of higher growth. So stocks have done very well. Persistent, for instance, despite the recent correction, so stock has still doubled in the last 3 years. And here, the kind of re-rating that we had seen in the PE multiples is substantial. So some of that is now being shaved off. So for instance, Coforge is trading at 36 times, Persistent is trading at 45 times, KPIT Tech is trading at 38 times. So some derating is seen. Now coming to what Jefferies is saying as they assess the impact of Trump's tariff orders. They also concur that the IT sector is not directly impacted by Trump's tariff order, but there will be an indirect impact on account of slower GDP growth worldwide. Higher tariffs may impact the manufacturing, logistics and vertical sectors. Also, the slower GDP growth in the US could result in Fed rate cuts. If the Fed cuts rates, then it could be positive for sectors, companies with exposure to communications, energy, utility, because these companies have very high debt. So if there are Fed rate cuts, then their balance sheet is, in a much, in a much more better position, and therefore maybe they will look at cutting tax rates, increasing their tech spends. So therefore they're saying that companies with exposure to manufacturing, logistics could get hit, but on the flip side, companies with exposure to communications, etc., if there is a Fed rate cut, will be positively impacted. So they've done the analysis of the kind of impact that we've seen, the revenue exposure to manufacturing and logistics, and according to the calculation, Tech Mahindra, HCL Tech in the large cap space, IKS and Sagility, these are companies most favorably placed. So for instance, IKS and Sagility get 100% of their revenues from the pharmaceutical, life science, healthcare sector, which is not been impacted as of now. Back to you.
Interesting. The top 3 losers on the Nifty 500 are the principal culprits that Reema was highlighting: Persistent, Coforge and KPIT Tech. Persistent down 9.25%. Coforge is down 6.5%. KPIT Tech also down 6.5% in today's trading session. So IT taking it on the chin in today's trading session. Meanwhile,